Hello, this is Patrick. Welcome to Chart Built Wealth, profitable investing with technical analysis. I wanted to cover the 7 positions that I currently have outstanding. They're acting well, uh, they're doing well, but I wanted to cover them. I haven't done this in a while, and I want to do this like in under 10 minutes. So um, let's get into it. Okay, the first position I initiated uh, back in towards the end of March was the China Large Cap ETF FXI. And uh, the breakout of the bearish channel gave us a buy recommendation. We got a uh, real quick acceleration upwards. And now we've had a pullback to a rainbow bullish convergence where all the moving averages are coming together. And this week, tomorrow, hopefully, this holds up. And if it can hold, as long as it stays above this convergence of moving averages, it suggests that we're going to hit a higher high, which would be above the previous, call it 2950 or whatever this high was. You can also notice, though, that we may be developing an inverse head and shoulders pattern with the left shoulder over here, the head, and currently developing the right shoulder. And if that were to happen, and if we were to break the neckline, then we'd have a big $39 price projection. So these things kind of morph into bigger patterns when they work out. So, when I initiated this position back in March, it was the goal of a technical analysis is to identify new trends at an early stage and then stay with those trends until they change. So that's what we did when this bearish trend was broken. And so this looks pretty good. The next one that position that I initiated coverage on 4 days later was copper. And so I was more confident in this because we had a big consolidation here for a year and a half, and in the form of a symmetrical triangle. I like pattern recognition because your reward to risk is always is much more favorable when you get a breakout of a big consolidation like this. And here's where we initiated the position back in late March. And based on this pattern, the price projection was 505. So when it got up to 506, I went neutral on the position. And then we got a correction, and I reinitiated the buy rating at 460. And it's gone a little bit lower, but it looks like now it's turning up. And if tomorrow holds up, and I saw the copper futures, copper is up about 0.75% today. If it could hold that, it would be a really confirming sign that prices have held this low, and we actually would have a bullish engulfing pattern with this white bar totally engulfing the red bullish hammer here. So that's what we're kind of looking at. And the reason, normally, if I hit my price projection on a pattern, on pattern recognition, like on this symmetrical triangle, I'd be tentative to get back into it. But as I showed on the previous copper update a week ago, when I reinitiated the buy rating, there's a much bigger pattern above this, which suggests prices could really go up. But that's down the road. We take this one step at a time, and I never get locked into uh, a definite uh, a definite outlook. If things change, I change, and I protect my money, I protect my profits, and I'm going to protect your profits. So that's where we're at. We had a really good run, got out at a good time, bought back in. I think that was about 10% lower. And so we'll see if this can continue higher. Uh, everything will be great. So that's copper, still bullish on China, still bullish on copper. And on March 31st, so a week later, I initiated on utilities with a buy rating, and in Southern Company in particular, because again, we had a symmetrical triangle. I like pattern recognition. Again, my reward to risk is really favorable. You can see all the necessary touches here. And when we broke out, initiated with a buy rating, prices got up to 75. There were some short-term undercurrents that suggested going neutral. It was a little bit early. Prices went higher, and now I've reinitiated with a buy again. So I just want to point out on this, again, this has a big dividend, 3.9%. It's lower than that now because the price is up, but not much lower. Pattern recognition. When I buy here was my stop. Here's where I bought. This was the reward, potential reward up here. So my reward to risk was 4-1. It was very, very favorable. So that's why I like pattern recognition. So still bullish on Southern Company, still bullish on utilities. So that looks good too. Marathon Oil, initiated on that on April 21st. So about 3 weeks later. And again, we have a symmetrical triangle. These are big patterns. They were really, really nice. So uh, I feel good about them until I don't. But here we had A, B, C, D, E. We had all the necessary touches. We had a breakout. We had a retest of that. And now you can see prices have risen again. And the price projection on Marathon Oil is 41.50, which is a lot higher than where we're at now. So I'm turning very bullish on energy, and I may be doing a big update this weekend on oil, which I've been uh, trying to find the right time to initiate with a buy over the last couple of weeks. So maybe we'll get that opportunity at the close tomorrow, the end of the week. But Marathon Oil, they were acquired by ConocoPhillips. So it adds a little bit of hair to this purchase, but I still like it. The chart is still saying it's going higher, so we're in good position there. We're in the money. GDX, the gold miners ETF. I initiated a buy rating on this 4 days later after Marathon Oil. And you could say this is a symmetrical triangle, and it has all the touches that we need. But I'm going to use a more conservative price projection based on an inverse head and shoulders pattern here. And you can see the left shoulder, the head, the right shoulder, and the breakout, and now a retest of that breakout. So the price projection is 50, which is 45% higher than where prices are now. I still feel good about this. Our stop is down at 32. If we can get a little bit more of a uplift here, I could move my stop maybe up to 33 and limit our downside. And again, this looks good. The one caveat here and the one worry I have about gold and gold miners and silver and copper is that the commitment of traders report, which looks at the futures markets, the big boys, the commercials who are in the business, they are the deep pocketed, they can move markets. They're at a very large short position in all these commodities, but they have been. And uh, while I'm worried about that, eventually it's going to matter, but it doesn't always matter right away. So at the end of the day, I gotta look at my chart. I gotta say, where's the trend? And right now it's up. So gold mining stocks look great. Again, the reward to risk looks good. And so this looks, again, we're in the money. It looks good. It's going in the right direction. and the sixth position, which was initiated May 15th. So this was maybe 2.5 weeks after the gold miners. I initiated on Abbvie, ABBV, with a buy rating, and the stop is down here at 155. Our price projection is 195. Our reward to risk when we purchased this was 3 to 1, which is attractive. And you can see prices really jumped up after that initiation. And we're getting a little bit of a pullback here. I'm expecting maybe a little bit more of a pullback over the next day or two. But again, this looks great. This is natural to get a retest. It's also in the money, and so uh, Abbvie looks great. And let's go to the last open position buy rating I have, and that is on fixed income. And this was a very big contrarian call back when we initiated on May 20th. So right here. And so the reason why I initiated way down here before our inverse head and shoulders gave us a clear-cut buy rating, left shoulder, head, right shoulder, neckline, downward sloping neckline. I like them horizontally normally, but you don't always get what you want. And we had a rainbow convergence here, a confluence of moving averages coming together, and we had a retest of that. Prices broke below it after I initiated with that, but the pattern still looked good. And here we are at higher prices. So the inverse head and shoulders is suggesting a price projection of 100, and we're at a real critical level like right now. So, you can see these moving averages are coming down now and they're coming together, and they should meet right about where the prices closed on Friday. So this is a bearish rainbow convergence. And so prices have to get through this. If they turn down from here, it suggests they'll go lower than our 90 that we're at. So you're talking about, I don't know, 2.5%, 2%. So, it won't be the end of the world. I'll still be bullish on fixed income and on the 20-year Treasury ETF TLT. But it would be really nice if we could get another update tomorrow on this so we can get through this convergence and look for higher prices. And oh yeah, so this is a small pattern. This is 1, 2, 3 months in the making. If we could get up to 100 and we look at a bigger pattern, a longer term pattern, here's what we got going back a few years. We got a left shoulder, a head, a right shoulder. So a much larger inverse head and shoulders potentially, and that's all it is right now is potential. But if prices were to get up to 100, like the short-term inverse head and shoulders suggests, it would put this in play, and then we'd have a $115 price projection. So again, these are ifs. So I'm just pointing out the reason why I like to get involved in smaller patterns before you get some of these larger patterns. And so that's what I had to update you on. I think it's been about 10 minutes. Again, I'm looking to initiate something big this weekend, and we'll see what tomorrow brings. I hope you have a great 4th of July and 4th of July weekend, and have a great day. Please, oh, wait a minute. I got to do my infomercial. Chart Built Wealth, profitable investing with technical analysis. Please like and subscribe. Many of these are intraday updates, and they're actionable during the days before the market closes, and then you have to wait and maybe miss out on something. So have a great 4th of July weekend. I'm looking at fireworks as I speak. Have a great night.